Hi there, my name is Andy Farquharson and I'm your host on Alternative Exit, the podcast dedicated to educating small business owners about the possibilities, benefits and challenges of transitioning to an employee ownership model. Did you know that there are over 200 million SMEs around the globe with an owner that will be retiring within the next 10 years? Many of these owners will never actually find a buyer for their business, forcing them to close their doors, wreaking havoc on their employees and the communities. There is an alternative. This show will explore different forms of employee ownership and the best practices for a successful transition. Each episode is going to feature interviews with experts on employee ownership, business owners who've successfully made the transition, and consultants who've helped facilitate these changes. Okay, now let's get on with the show. Hello and welcome to the Alternative Exit. Today, I am thrilled to have Derek Razo with us. Derek's the co-founder and managing partner of Common Trust, a company that's been redefining how businesses transition to employee ownership. And they've also been a creator of great content to educate people. And also they were a big part of educating me when I started on my journey about a year ago. So his work has been instrumental in making employee ownership a viable and impactful succession solution. What we're going to hear about today is probably a few sort of innovative solutions and new ownership models and structures, which he's been utilizing and experimenting with in the US. And really excited to hear more about his journey and the innovative approaches he's been championing at Common Trust. Derek, welcome to the Alternative Exit.
Thanks for having me. Excited to be here.
Yeah, mate, this is going to be a good one. So, look, you've obviously been involved in the employee ownership for quite a while. I mean, I'd love to learn a little bit more about what initially drew you to the space and how did those sort of early experiences you had shape your vision for Common Trust?
Yeah, so I've spent, my whole career starting things and trying to build things. And for a while, I had been working just directly with business owners, both like startup business owners, small business owners, as well as working with a couple larger businesses in more of a support consulting capacity to try to help them figure out financing rounds and with a focus on exit and planning the future of the company. And through that experience, kept finding myself in a position where even if the sort of financial outcomes were aligned with what the owner had wanted, you build long-term relationships with people who you work on projects like this with. And there was often this kind of feeling that something was missing, like it didn't go quite as well as it could have gone when the company had been sold to a third party. And, often that looks like people leaving the company after the transition. Often it looks like the culture getting messed up after a sale. Sometimes it looks like, very dramatic, like the company being shut down or sold for, resold for parts. And sometimes it was more neutral. But in any case, there was this sort of longing, I felt like, from the folks that I was working with for kind of like a better solution. Like, surely there's got to be something better that we can do here. And that got me really interested in, alternative exits. And so spent a number of years, about 6 years ago, I started a foundation called the Purpose Foundation, which does research on ownership, governance, and financing models for, alternative ownership as well as community ownership. And through that process, learned a lot about employee ownership and the sort of new in that foundation, we sort of built a new toolkit for how people could exit their companies while kind of protecting their legacy and values and also transitioning ownership to employees over time. And that got me really excited. And that kind of led to the genesis of Common Trust, which is, a platform that we're building to basically help small and mid-sized businesses transition ownership to their employees while taking cash off the table.
Yeah. Awesome. So as you're thinking about that transition, I mean, we'll probably come back to law and talk a little bit more about what you guys are doing there at Common Trust. But I know that at the moment you're really focusing on EOTs, employee ownership trusts, as the key transition tool. It'd be great if you could talk and explain that to an audience. What is an EOT in the US and why is it particularly beneficial for businesses who are looking to preserve their legacy and their mission?
Yeah, of course. It's maybe worth backing up for a moment and just talking about the scope of the challenge. So in the US, right, according to a bunch of different sources, we have about 3 in 5 businesses, small businesses especially, that are going to be looking for an exit in the next, say, 10 years. And of those business owners, about according to the data, about 80% of those business owners will fail to sell by default. And of those 20% who do sell, about 75%, 70 to 75% of those who do sell will actually regret the sale a year later when polled. So the default state of play is pretty grim in terms of the outcomes to some degree. And beyond that, if you look at those numbers and then you compare them to the amount of transactions that are done on a year over year basis between the broker space, private equity, strategic acquisitions, we estimate that somewhere around like 4 to 6% of the total volume of desired exits are going to be able to be serviced by the existing sources of exit financing capital buyers.
This is not enough search funders in the world to be able to come up and bridge that gap.
Yeah, exactly. And there's not enough, for a lot of those exit methods, the kind of strategic exit or a private equity or a search fund, the return expectations, what they're looking for in a company is really that they want to flip the company, in 3 to 5 years or 3 to 5 times the value. That's kind of the adage in the private equity space. And the reality is that for a lot of small businesses, that's not really a viable pathway. And for those businesses, they're just not going to, this is not a judgment statement about searchers or private equity, but it's like, I think unless they magically decide that they're willing to take much lower returns, a lot of businesses just aren't going to be a fit for those exit pathways, right? And so what we're left with is this huge gap in the market in terms of how people can actually look at exiting their business in the next 5 to 10 years. And that's kind of where the story of employee ownership enters and becomes really compelling, which is, there is a group of buyers in the market who could potentially take up this 95% of the rest of the market, which is the employees of the businesses themselves. And there's a number of different ways to approach doing an employee ownership exit. The most common of which, probably the two most common of which are, the ESOP, which is a retirement trust vehicle, which a lot of people know about, and, a direct sale, so selling directly to managers and management buyout. Both of those are good in different circumstances, but, in the current market, there is still this like gap that's not being filled by those solutions. And that's where we think, the EOT can play the employee ownership trust can play a really important role, which is in helping, small and mid-sized businesses transition ownership to their employees in a way that is a structured plan that actually, sets the owners up to get a fair deal out and sets the employees up to own the company, and also can preserve the company, in terms of its legacy and values and its impact on the community that it's serving. So that's kind of where I think the employee ownership trust fits into the landscape. One of the main reasons we're excited about it at Common Trust is employee ownership trust is functionally a private trust vehicle, non-charitable trust that allows you to transition ownership to your employees in a secure way that reduces, everybody's liability, that is very structured, and that, sets everybody up for success. So it's sort of a little bit more secure and structured than, an MBO or a direct sale might be. You still get that kind of structured element from the ESOP, but you don't have the administrative burden and the cost that comes with an ESOP. So what that cashes out in is that the EOT is going to be a fit for a really like a much wider swath of companies than any of the other methods. So we really are excited about it as like a very scalable method, applies to a lot of businesses, from billion-dollar companies all the way down to, small local businesses.
Yeah, super exciting when you talk about it like that. I mean, in quite a few of the other podcasts, we've been talking about ESOPs and the huge burden it is for people to be able to, not just establish them, but then to come to like a mutually agreed sort of valuation on a regular basis and ensure that that passes muster at audit and all those fun things. With the structure, I mean, we've spoken to a couple of people from the UK, and they talk about their UK structure. Super excited. We're going to be learning more about sort of the Canadian structure soon. Can you just talk through a little bit more about like what does the mechanics look like? Like, is there a trust advisor that's sort of appointed? Yeah, it'd be great to learn a little bit more.
Of course. In the US, the employee ownership trust is pretty simple. It's like I said, it's a private trust. You set it up. It has a trustee board, a group that manages the trust. Typically, that trustee board will be made up of the founder, if they're exiting, and a couple of key employees who are playing a role in transitioning the company into the next phase, as well as, in some cases, line employees or other representatives of the employee group as a whole. it's a very customizable structure. So there's no one size fits all answer to the question of what does it look like, but that's probably the most typical thing that we see. And, the trust is essentially, for the most part, the trust is often set up as a vehicle to enable sort of long-term ownership and profit sharing amongst the employees. So that can be, the broad base of employees, that can be, a smaller group of employees, that can be a combination of the two. And most typically what we see is, a distribution of benefit. As the owners bought down, the employees are able to generate more benefit, share more benefit amongst themselves. And that plan is usually set up when you set up the employee ownership trust in the beginning.
Okay. So there's a little bit more of a burden on the first generation of those employee owners as they're paying down the debt. But then once that happens, then it's obviously it's their entity. And so second, or the back end of their first generation, but the second and third generations really do reap the rewards.
Yeah, exactly. Like it's true that with any employee ownership transition, there is going to be this moment where you have to pay the owner off and you have to make the deal fair. And that's kind of stepping up into a new level of responsibility for the senior leaders, especially, and the employees as a whole. So that's going to happen in any employee ownership structure. And it's mainly a matter of like, how do you set that up? How do you make sure that it's successful? How do you make sure that everyone's protected? How do you guard against, people leaving? All those details are where, the magic happens in some sense.
Yeah, absolutely. The part I loved about what you were talking about, which compared of the EOT compared to an ESOP, is the fact that people do get ownership and profit share. And it's not just sitting in a retirement fund. They don't have to wait until they retire to really reap the value.
Yeah, that's right. Yeah, and that's a big benefit we see a lot of owners get really excited about, especially for certain industries, right? We work with a lot of professional services, but also a lot of, blue collar industries where, the idea of selling the company to an ESOP, which is going to only pay out typically at the time of retirement or the time of resale, is not as compelling for a lot of the workers, especially in the employees. Being able to set one of these structures up where in a very real and tangible way on a year-to-year basis, you can say, we paid the owner this much, and in exchange, we got access to this much more of the profits of the company, and we're able to share in those profits. And doing that year on year is just super motivating. It's super tangible. People really get it in a way that can be a little bit more difficult if it's, this kind of very abstract structure sort of plan in some cases.
Totally agree. Yeah, totally agree. So you also talked about there's the board of trustees. You did talk about some like employee representation on that board. How do you see the role of sort of democratic decision making within a trust? And do you think it's really important for people to really sort of harness to get a lot out of employee ownership?
Yeah, I would say that. So typically what I say is when we talk about ownership, and what like drives the benefits, the sort of performance benefits that we see that with employee ownership, which are, the research on it is very clear that employee-owned companies have like all kinds of performance benefits in terms of how, the profits and the impact on people and all that stuff. I'm sure you've covered that in other podcasts. But in order to drive those benefits, what you're really looking for is to build like an ownership culture. And in order to do that, people, when they think about ownership, are really looking for kind of two things. One is they're looking for a sense of them having a voice in the destiny of their work. And two is they're looking for a share of the benefit, right? That is direct and that they understand. And if you can nail those two things in any structure beyond the employee ownership trust, then you're going to start to see the benefits of employee ownership, right? So that's kind of how I think about it. And then, when we approach designing an employee ownership trust with a business, then a lot of the times those are the kinds of questions we're asking. It's like, okay, how do we sufficiently create the sense of having a voice in the destiny of my work as an employee? And how do we sufficiently create benefit that is going to engage people in a deep way and give them the opportunity to feel like they're benefiting from, the success that they're helping the company have. And that can look really different in really different cases, but those are kind of on a principles level, that's like really what we're aiming for.
I'd love to hear some examples. I mean, when you think about like the share of the benefits, I mean, you've talked about obviously the profit share and getting equity. Because you think about the voice, yeah, I'd love to hear some examples of different ways companies have that you've worked with you've given the employees that voice.
Yeah. So one story I can share is about Clegg Auto. It's a company that we transacted with, about 2 years ago. think at the time that this will be released. And they set up a couple different mechanisms here. So, they have the trust board. It's really small. It's the, one of the founder owners, his like right-hand man in terms of senior leadership, and one outside party who provides kind of external expertise. They kind of run the trust, and they run a process. There's two things that they do to achieve this kind of ownership culture that we're talking about. So the first, on the voice point, is they run assemblies with the employees to essentially gather their input about, what they're seeing, how they think they could improve the business, how they think the profit share, they can improve the profit sharing program, what they can do to, support the business growing and stuff like that. And that works really well, right? Like you get the employees together and you kind of have a day or a half day or something. Typically, I think for them, it's like a half day sort of workshop that they run, I think once a quarter, where they're like, okay, cool, here's what we profit shared. Here's what we did to get there. Here's how the company grew. What are we doing next? Like, what do we see as the group of employee owners as the next stage for us to grow and to keep sharing benefit and improving the company for everybody's benefit? That works really well. So that's kind of on the voice side. And then, on the benefit side, they have a profit sharing program. One story about that is, we set up a profit sharing program with them as a part of the transaction. And then it has evolved over time. But in the early stages, Clegg Auto is essentially an auto shop. It's a collection of mechanic shops and body shops. And at the time, they kind of had one shop that was still starting up, like still getting going. And that shop didn't necessarily make a profit in the first year of their employee ownership, right? So they have this profit distribution mechanism, which was about, how well did an individual shop do is going to determine part of your profit sharing. And then how well does the whole do is going to determine a part of your profit sharing. When they held this employee assembly, part of what they did is they said, okay, well, here's what the profit sharing is going to look like based on how we've set it up. What do you guys think? And the employees as a group kind of came together and said, hey, look, we really think that it would be better if we shared the profits equally this year across all of the shops because, these guys are still getting started. We think they're doing a good job. That could have been my shop. And, we're all in this together. So let's just spread it equally among all the shops, right? There's still performance basis in there. So some people are getting more based on performance or role or something like that. But in terms of how they distributed it across the network of businesses that they own together, they were able to do this kind of, really powerful move to share profits across the whole business to improve everybody's odds of succeeding together. So that's like a really wholesome example of like how it's worth saying like this isn't like a crunchy coastal group of like co-op people, right? Like it's like auto mechanics. They're very pragmatic people, right? But they see the benefit in, hey, like we're all in this together. Let's like share the profits across all the groups, and we're going to do better together as a result. So I think it's a really powerful story of how this type of thing can manifest.
Absolutely. I think it also just highlights, I guess, some of the reasons why employee ownership is just so powerful, to be able to bring people together, like people from different backgrounds, different beliefs together, and just have a sort of common conversation and look after each other. It's all.
And you can imagine like being in that, one shop that was still getting started, right? And having this decision made to like share in the profits. Like it's hard to imagine it not positively affecting performance, right? It's like, and then on the other duty now. Yeah.
Those other side too. Like saying, hey, look, we're giving that to you guys, and seeing that, it's a really strong virtuous cycle. It's awesome. If you think about it on the other side, like away from, so we've talked about, so what's the value for employees? What are the challenges for these business owners as they're looking to adopt?
I think the biggest challenge writ large is like it being a little bit new. Like I think for a lot of business owners, this idea of selling to your employees is just like not the most traditional thing they've heard of doing in terms of a business exit. Like for most people, the story that you've been kind of told about how you exit a business is, you get a broker and you go find a buyer and you sell the business and you get a bunch of money, and it's all great. That can work for some people, and it does work for lots of people. A thing that business owners could benefit from is really just getting educated about this particular approach, whether it's the employee ownership trust or other structures, but employee ownership in general, I think is really powerful. There's, tens of thousands of employee-owned businesses in the US, and it's not a brand new thing, but for a lot of owners, it is kind of like a new topic, a new way of thinking about it. And it requires this kind of mutual trust to some degree of the employees to step up and take the torch and move forward. And in some cases, another challenge can be owners are often advised by their kind of technical professional CPAs or whatever to, do the least risky thing possible. And I think there is a perception that, if you're taking a payment over time or something like that, that's going to be more risky than if you're, getting bought out all at once. And in some cases that's true, but we've seen really good results with, quote unquote seller financing, owners being paid out over time. And so I think that's another thing, just another education piece is like learning about the structures and the way that these things can be financed and seeing the successes and learning about the successes that are out there, I think can be really powerful for folks.
Well, I think some of what you just talked about there also gives them a little bit more flexibility than, say, if they did just have an exit, that they lose all control right at that point in time. Whereas here, they're not a little bit more of a staged exit and potentially even.
Yeah, for a lot of business owners, they want to stay involved. And for that, like, this is definitely a great way to do that. For those that don't want to stay involved, that's also fine. And that works in a lot of cases. You can still kind of keep a hand on the wheel while you're being paid out. I think just getting comfortable with a different way of doing your exit in general is a big learning experience for a lot of business owners that we work with.
We think about that. We talked about that from the owner's perspective. I mean, but if you look more broader, how do you envision the future of employee ownership? I mean, specifically in the US, I mean, are there any sort of emerging trends or models that sort of excite you? Or do you think, hey, we've got the model, we just really need to get more wood behind that arrow and really sort of promote it to meet the demand?
Yeah, I mean, we're really excited about the employee ownership trust as a model. I think that's, a really excellent solution. I think there's a lot of potential for, management hybrid, like management buyout plus like broad-based employee ownership to be really successful. A lot of the companies that we're working with who have done an employee ownership trust are also finding that there's a lot of appetite for companies in their communities or businesses to exit into their trust. So people who don't really want to do their own employee ownership process, but like would love their business to be bought by an employee-owned business. So that's like another advantage. That's really exciting. I think we're seeing some momentum there. We kind of refer to it as like conscious consolidation. It's like, what if, instead of aggregating businesses into a private equity roll-up vehicle, that is kind of pulling wealth out of communities, we actually have, these employee-owned holding companies in these communities that are able to aggregate businesses in a way that recycles that capital and benefit back into its own community. That's super exciting.
Yeah, that sounds super exciting. Are there any examples of that happening now?
It's in the early stages, but folks like Clegg, I think, are really interested in this, and other businesses that we've worked with who've done kind of the transitions already. It's an active conversation among the kind of community of folks who've done this type of thing.
Yeah. Well, I remember just trying to think that there was a company based out in Vermont, the Caris company. Like they were sort of going on that pathway anyway, where they were just sort of, they've acquired multiple companies and transitioned them into an employee-owned model, which has really been beneficial for wasn't so much geographically located to be around sort of that series of communities, but it's more just,
could be like industry or yeah, totally.
Right.
Yeah, I think that's a really powerful trend. And I think we're going to see that only get more powerful as I think like the wave is only just starting to really pick up. And as these like millions of businesses look to transition, one of the things that you're going to see, and you're already sort of starting to see, is we're very familiar, I think, in like, for example, real estate, this idea of like, it going from a buyer to a seller's market in different times. And I think that we're going to see the market for companies being bought by private equity be much more competitive, right? Like as there's this huge deluge of businesses that are looking to sell, only the top, 1% or whatever are going to be able to actually take that path because the market is going to be so flooded. I think that's going to present a huge opportunity for employee-owned companies to make acquisitions, for people to transition their own company to employee ownership. I think it's a really exciting trend.
Based off that sort of, I guess, genuine mismatch of supply and demand, like, what do you see? It seems like there is going to be a huge demand for those sort of that top 1% to 5% of companies, right? And so that you can see that their valuations, like all the great assets, are going to be sort of valued at a much higher rate. But so the companies that you sort of identified that probably might be a better fit for employee ownership with just steady performance. They're not going to sit there and be able to experience a huge amount of growth, maybe not be sort of appropriate for a roll up. But do you see potentially the valuation for those businesses to be coming down a little bit to sort of with the lack of supply, or do you think it's still just going to, with an employee exit, it's still just a way of being able to find a fair distribution for everyone?
I don't know if I can opine on the like broader market valuation trends just yet. I think it's still pretty early days. I think that it's important to say that like with an employee-owned exit, you can get a pretty competitive valuation. So I don't think there's a huge valuation mismatch, although typically the reality is like a strategic acquirer who's willing to pay a premium on the business for some reason that has to do with, their core business is going to be your best bet in terms of, if you want to get, if your core goal is just to get the highest valuation. But, outside of that, I think employee ownership has a pretty competitive valuation approach. And I think the EOT in particular, right, because it's a private trust, not regulated in the same way that an ESOP is, has a little bit more flexibility in terms of how you approach the valuation. And especially if you have flexibility about being paid over time, there's ways to average up your sale price. So I'm pretty bullish on like the valuation point. I wouldn't claim that we're seeing like a downward trend in valuations necessarily, but partially that's because valuations are based on the acquisition market itself, right?
So yeah, the ones that are made
in that way. Yeah, there's like there is a mathematical coupling between the acquisitions and the sort of approach that valuators, including ourselves, will take to valuations.
Yeah, makes a lot of sense. Is there a tax incentive in the UK for people selling to an EOT? In the US,
in the UK, there is
like there is in the UK. Yeah.
Yeah, no, not yet, not in the US. So typically what we'll say is in the US, if you're selling to your employees outside of an ESOP, you're going to get, the same tax treatment you would get as selling to a third party. So you're not really leaving money on the table in that sense. There are some ways to optimize the taxes by spreading out the income or, other methods. But there's no sort of policy level program for EOTs yet in the US. It's almost certainly going to happen at some point in the future. But right now, it's not an option that has a tax incentive.
Yeah, I guess that's where the flexibility of the EOT really does help. As you said, like you can structure the deal in different ways to better optimize for your own environment. So look, you've alluded to how Common Trust is helping companies through this transition. I'd love it if you could talk through a little bit more about like what exactly you guys are doing today and how you see the vision for the business in the coming years.
Yeah, totally. Yeah. So Common Trust, we basically help business owners to plan and execute their exits to employees. It's pretty straightforward. We work with dozens of businesses in all industries and many different places around the country. But we're focused on the US. Our process is really about helping an owner assess, is this going to be a viable option for me? So the planning phase, designing the employee ownership program, including, all the stuff we've talked about here, the voice, the benefit, the structured exit and how that works for the owners and how we secure all parties. And then, the legal and the execution side on the back end, as well as some ongoing support. So that's kind of that's like the quick overview of our process and like what we do. And we also have a fund. We provide financing for some businesses when they're fit for us. We also have a network of capital partners that we work with closely to finance these deals, even if they're not fit for our fund in particular. So really trying to build a big tent. So any business that comes to us, we can help you evaluate, is this going to be an option for you? We can help you value the company, do all that stuff. We can help you suss out your capital options, see if, there's going to be a capital partner who can help you accelerate your liquidity. We can help you structure the deal and do all the kind of legal and financial pieces to get a deal done once you're ready to do so.
Okay. Fantastic. Well, there's the fact that you're looking at a lot of businesses and helping them sort of decide whether or not they're going to be a good fit. If you could say, like, what are the 3 sort of highest signal characteristics that you'd say, hey, look, you're an amazing fit for employee ownership?
Yeah. I think history of profitability is a really good one. That's going to be true for any exit option, to be honest with you, in the small business space. But it's, especially important for an employee ownership exit. I think having a team that you trust and that you think is capable of running the business. A lot of folks that we work with don't, disappear on day won after a transaction, they'll stick around and help, and that's really valuable to the employees for some period of time. But having a team that you have built, that you think is capable of running the business, especially in the long term, is really important and valuable. And I would say clean books. Being able to reason about the financials of the company is also very helpful. That's something we can help with. So it's not a hard and fast rule, but if anybody preparing for an exit, you should probably clean up your books.
Yeah. Look, it's good candidates for employee ownership are typically just good businesses.
Exactly. Yeah, that's a totally reasonable way to put it. Yeah.
Yeah. Awesome. Okay. Hey, I want to. I could keep going dig on this for ages, but I want to be sort of mindful of time. So I just want to finish off with a fast round of questions. I'm just going to ask you 3 questions, and you offer a quick response. How does that sound?
That sounds great.
Okay, so fast round of questions. I'm just going to ask you 3 questions and you offer a quick response. Sound all good? Who is the leader you most admire in employee ownership?
Ooh. I'll give a historical example. I really admire the work of Louis Kelso. So Kelso is kind of the originator of the ESOP, and his vision for what the kind of shared ownership sort of universe in the US should look like went way beyond ESOPs. And he's written all these very amazing, very technical books about many different structures that could be used for promoting shared ownership for real estate and for mutual holding companies and all these different things. Unfortunately, a lot of those structures haven't really been implemented, so the ESOP is kind of the enduring piece of his legacy. But I think the thinking that he did about how to promote a shared ownership economy is just best in class.
Yeah, there's so many amazing quotes coming from him that just coalesces the whole issue. It's awesome. Okay. What is your favorite resource on employee ownership?
Favorite resource? It's a good question. I really like videos. So an example is a company that we transacted with, is the first software as a service company to go employee owned in the country, is Textamol. Helped them transact about a year and a half ago. They produced on their own a sort of mini documentary that's on their YouTube channel.
Oh, yeah, cool.
And then they also have interviews with their employees and stuff like that. I just find the videos are very they just make the whole thing very tangible and very real. Because I think there's a lot of academic work on employee ownership that's out there, but something about owners talking about their own experience and employees talking about the experience is just very powerful.
Yeah, I love those emotional connections. I'll definitely get a link to those, put those in the show notes. And then finally, what would you say to a business owner who's sitting on the fence regarding exiting to employee ownership?
Yeah. The main thing I would say is come talk to us. We can help you suss out the options really quickly. I think that, it's an option for more businesses than you might expect. And we're really happy to help people, figure out, is this a good option for people?
Awesome. Derek, where can people go learn more about you? And
so
Common Trust.
You can just Google Common Trust, or you can go to common-trust.com.
Okay. Very nice. Can people reach out to you on LinkedIn or?
Yeah. I'm on LinkedIn. A bunch of our teammates are on LinkedIn, and you can book a call with us directly from our website as well.
Okay. Well, Derek, thank you so much for your leadership in this space. Thank you for your generosity and your time and sharing your thoughts with us today.
Awesome. Thank you for having me, and thanks for doing this project.
Mate, no worries at all.
Awesome. Bye-bye.
We hope you enjoyed this episode. If you want to continue learning about employee ownership as an alternative exit, head across to abettermonday.me for additional links and resources. You can also make sure to subscribe or follow along in your favorite podcast app, and be sure to leave us a 5-star review.